this is Denise with Team Vergadamo and eXp Realty, and here today with our Today in Tampa Bay. I'm with Tasha Faiella, and Tasha's going to help us in our section of simplifying the home buying process. So, Tasha, as a lender, what's it like for you as you're working with clients the first time you meet them? What can they expect from you the very first time they reach out?
The first time you reach out to a lender can be super overwhelming. However, we've gotten it down to a little bit of a simpler process. We're going to ultimately ask your goals, the areas that you would like to live in, and what your financial stability currently is. And that's going to include where do you work, what's your credit history like, if you have any dependents, and what your ultimate goal is for the next investment on buying and purchasing a home. We'll take you through the process. We generally do this over the phone. We can meet in person, or we can do it FaceTime, whatever's comfortable with you. And at that time, we'll go ahead and set up your goals list, get together your pre-approval, and we'll send you back out to your realtor to get you ready to go on the market.
Oh my goodness, that sounds like a lot, but how often do you do this? I mean, if I were first-time home buyer, why would I want to come to Caliber Home Loans? Because that sounds like a lot.
It is, and it can be a lot, and it can be very intimidating. But the good part is that we simplified it down to, let's just talk. Let's just have an open conversation, what your goals are, what your family's goals are. And at that time, we're going to get your application, and that's going to include, your current address, your employment. We're going to look at what your assets are. Then we're going to go and compare to the markets, the products that are available within the Tampa Bay or even in the state of Florida. And from that time, we kind of just tailor it down, and then we make a concrete decision at that time. This is going to be the best solution underneath this product. And if that doesn't work when you go to, maybe get a house, then we'll go ahead and tailor it again. And we have endless amount of products for you, but we try to make it as easy and streamlined as possible because we are here to help you.
Tasha, it sounds like you've done this a few times.
I have. I've done this quite a few times, and my specialty is actually first home-time buyers. Okay. And with that being said, the products that are available through the state of Florida is quite endless. And at that time, it's best to sit with a loan officer to determine, what are you eligible for? Are we eligible for maybe USDA? That's 100% financing. Now, granted, you're going to be living in a certain area, but that's okay. I mean, it allows you flexibility with your financing. Then also we have the Heroes program, as we talked about last time, up to $25,000. Then you have your traditional FHA, which is 3.5% down, which everybody tends to love on the first home-time buyer side. The products that are available are up to imagination, I feel like. It's just making sure that we listen to what your financial needs are and what your goals are for owning your first home to ensure that we put you in the right program.
So, Tasha, tell me a little bit about, okay, so let's say we've decided on a product. Mm-hmm. I've gone out and found, my realtors helped me find a home. So now what happens next on your end? Do you work with all these individual loans? Do you have people working with you to help all this? This would be a lot to manage on your own.
It is, but the good part is I have an amazing team with Caliber. Amazing. And what happens at the time when you receive a contract, which is the most exciting part, is myself, actually, I will work with you up front. What to expect is that you're going to receive federal disclosures. You're going to receive all the estimates that are tied to this transaction. Then we'll gather all the rest of your documents, and that will be tax returns, W-2s, paychecks, anything that's applicable to the credit profile. From that point, then this is the most exciting. We're going to turn you over to underwriting, and everybody gets nervous, but the good part is that we've done so much work on the front end that the underwriting process should be seamless for you. The underwriter will take a look at it. She'll validate everything that we did, issue out her approval. Then from that point, we're going to get appraisal, we're going to get all the final documents, and then we're going to get you ready for closing.
Excellent. Now, how long does all of that take? I mean, it's not something that can happen in just a couple of days, is it?
I wish it could. It takes a little bit, but the good part is that we always try to close within 3 to 4 weeks. That's usually about the norm is from the time that the seller maybe needs to vacate the property. My buyers get their financing and get the appraisal and home inspection, everything that needs to be done. But on all our resale homes, we do achieve for a 3 to 4 week closing, if not faster, depending on all the parties that are involved. It's a lot of people involved, but we certainly do try to speed it up.
So Tasha, one of the things that I know people always ask us about as realtors, um, pre-approval, pre-qualify, and those kinds of terms. So why don't you clarify for us the difference of those and why one is more important and more valuable than the other?
Oh, I love this question because when dealing with a pre-approval versus a pre-qualified, let's just say this: there's some lending companies out there that you just go in there, you plug in all your social, your date of birth, what you do, and boof, it just like pops out a letter and
Like
just
magic?
says like magic. Like I feel like it's magic. Like it just pops out and it says, all right, you are pre-qualified, pre-approved for this. And as opposed to when you work with the, Caliber, I generally will speak with you. I will gather all your documents. I'm going to validate your income. I'm going to look at your credit report. I'm going to look at your tax returns. I'm going to run all the automated systems. And the great part about that is that when our buyers go to offer on a property, I can confidently tell the listing agent, yes, I have pre-qualified this borrower. I've checked all my boxes. I've looked at all their income. I have calculated their debt to income. They are 100% ready to go, as opposed to other, in institutions that are out there where it's just this magical letter that comes out and nobody's looked at anything. Because, let's be real, everybody has their own unique credit situation, their income. A lot happened during COVID. People got their income cut. Are we evaluating that? That is something that you certainly need to validate, because we want to make sure that when you receive that signed contract, you are going to close. Mm-hmm. And unfortunately, there's a lot of bad stuff that's out there, and the internet says, oh, they gave me, a pre-approval letter and I didn't close. There was no one to look at it. And that's why we're here, is to make sure that when we give you that pre-approval letter or that pre-qualification letter, you are 100% approved and you're not going to have any problems and you're going to buy your first home.
That's great. So it sounds like Caliber goes a little bit beyond to make sure that the folks that you've got out there are ready to go, solid, so that when you tell me then, if I qualify to purchase up to X amount of home, I really can be looking at homes in that price range, as opposed to, okay, now I found the home of my dreams. And then when the numbers really get run, come to find out I really need to back down my expectations.
That is one of the things that we're consistently having to overcome when I receive buyers that might have been pre-approved or, what have you from somewhere else is, did they give you an interest rate? Did they give you a max payment? Did your lender teach you how to run your potential payment? And that is one thing that we try to encourage and, give all our buyers and also our realtors. Hey, we've pre-approved this person. This is what I'm using for a rate. This is the product I'm using. And then, we're not going to stay in a flood zone, or if we're going to have HOA, there's so much that makes up someone's debt to income ratio. It's just not the purchase price. It's just not the credit score. There's all these fundamentals that come in by working, tandem with your realtor and your lender to ensure that that monthly payment is going to qualify and that we've, allocated for HOA or for flood or for anything additional inside that home. We want to make sure that when you offer, you're 100% ready to go. And knowledge is power. And that's what we teach our realtors and we teach our buyers.
Tasha, several times you've mentioned products. Give me a little bit more specific as to what the different products are. And if I'm not a first-time home buyer, what are some of the things available to me?
That's a great question. As far as products available, let's take it simplified. VA is one of the products that you do not have to be a first-time buyer, which is your Veterans Affair. So if you served in our military or currently serving in our military right now, you are entitled to use your VA benefits. And under that program, it's 0% down payment and there's no mortgage insurance. Therefore, you can use it at any point in time. Also, if you are a surviving spouse or if you have a child that is surviving after the veteran has passed, you are able to use their benefits as well. And when I mean benefits is that the Veterans Affair guarantees their loan at 100%. And again, no mortgage insurance. So that is a great product that's available. The next product that we traditionally love is FHA, which is Federal Housing Administration Loan. This is secured underneath our government. It's 3.5% down, and it does carry mortgage insurance, but it's at a lesser amount. which ultimately allows our first home-time buyers or even our second buyers that are purchasing another home a lesser down payment with a mortgage insurance that is a little bit more healthier on their debt to income. I traditionally vote for this one. I mean, I'm a long-term loan officer and I would still use this product available. It doesn't matter how many houses I purchase. Just keep in mind, you cannot hold two FHA, Federal Housing Administration loans at the same time. The next product that we have in line underneath our government loans is USDA, which is United States Department of Agriculture. It's 100%. That means there's no down payment. You don't have to be underneath the military. You don't anything crazy. It's 100% financing. However, there's a small eligibility mat that you have to purchase your home in, which is great. I would ask your realtor, I would ask your lender if you're focusing in on one area to make sure that area is eligible. That allows the borrower to have a lesser of a mortgage insurance because it's government loan. So your mortgage insurance is going to be a lot less compared to your regular conventional, your Federal Housing Administration loan. But the only thing is you just got to live in a certain area, but that's okay. It's 0% down. The next product that, everybody knows is your conventional loan. Everybody talks, you need to be approved conventional. Conventional is backed by Fannie and Freddie. Everybody, generally, you'll hear those words a lot. Those are your, regular 30-year fixed loans. And you can do 25 years, you can do 20, 15, or 10 for, however long you want to finance your home for. It's best to work with your mortgage loan officer to find out what your monthly payment is going to allow for your debt to income. Do you have mortgage insurance on conventional? Absolutely. However, if you put 20% down, you don't have any mortgage insurance. Not everybody can put 20% down, but your loan officer is able to look at your mortgage insurance and say, are we going to pay monthly? Can we maybe potentially buy out that premium for the life of the loan at closing? There's so many things that you can potentially do with your conventional to handle your mortgage insurance. That is the most common one that everybody asks for. But generally, the first home-time buyers, we're going to lean back on our government loans, which is the Federal Housing Administration, your USDA, and as well as your Veterans Affairs loan.
A lot of information there, Tasha. Thank you. And again, it just goes to show why it's so important to work with a competent lender that not only knows their product, but has worked with it enough to be able to look at all those specifics so that you're setting your buyers up for success right off the bat.
Absolutely. The biggest thing is make sure your lender's giving you 3 loan scenarios. A lot of people don't realize that. As a mortgage loan officer, we are supposed to provide a three loan option. Now, sometimes not everyone's going to get 3 because of what their, credit score and debt to income and stuff, but we're certainly always going to try to provide 3. And if you don't get 3, you need to ask those hard questions. Why am I not receiving 3 different loan product scenarios? And by doing that, it allows you to maybe open up, his or her eyes, be like, maybe I could, get the first home-time buyer through the state of Florida. Maybe I am going to be eligible for USDA. Push a little bit to make sure that you're getting all the options that are available for a buyer.
When you were talking about the conventional loan, you talked about different lengths of the loans. Let's say I've got my loan, got my home, I'm in it a while, and now maybe I want to pay down my loan sooner. Can I do that? Is that even an option? Is that something that you have to establish at the beginning of the loan? How does that work?
So traditionally, a lot of my buyers and my buyers that we close is I always encourage them, pay bi-weekly. Pay your mortgage bi-weekly. What that does is it comes out to an extra payment a year. So ultimately, you're already moving that mortgage in the right direction to get it paid off. The most important thing is that the prepaid penalties are generally 99% not on loans. And I think that's what you're inquiring about is a regular conventional loan through Fannie Freddie traditionally do not have prepaid penalties. I encourage all my buyers. But one thing that someone doesn't actually know is that you can recast your mortgage. So let's say that you're making your monthly mortgage payment every single month and you get your tax return and you're like, you know what? We have an extra $10,000 that, we have saved up. Call your lender. Be like, can I recast my mortgage? And what recast does is that it allows the borrower to make a big chunk to their principal payment without touching your interest rate. It's super awesome. I encourage all my buyers to do it. And then along that, if you're making your bi-weekly payments, or if you decide, hey, I'm ready to pay off my mortgage, you absolutely can at any time. Just make sure you go back and you reference the note. The note is something that the borrower signed at the time of closing. It will outline if there's anything in there as far as prepaid penalty, when the mortgage is fully due, as far as the term. But really take the time to ask your loan officer, do I have the right to recast? Do I have a prepaid penalty? Do I have other options instead of just a standard 30-year mortgage? You might have a potential to get an ARM. I traditionally do not do ARMs for my first home-time buyers. However, my investors that buy multiple properties might be a candidate, but the traditional is going to be your 30, 25, 20-year term mortgages.
So the elephant in the room in
know
this day and age are rates, where rates are going, where we've seen them go from the beginning of this year and on. And one of the things that we hear from buyers all the time is, well, maybe I should hold off buying a home until the rates come down. Well, houses are going to continue to appreciate. Yes, rates are going to continue to go up. So what's the suggestion? One of the phrases that we've used with folks, marry the house but date the rate. So how long would I have to wait? Say I get in and at a current rate, how long would I have to wait before I could maybe refinance if rates come down?
This is an ongoing topic. I'm pretty confident that I have multiple times a day to assure buyers, as you just said, marry the house, date the rate. Yes. Have we seen a huge shift in the market? Absolutely. Are we in the COVID rates anymore? I call them COVID rates. And the reason why I call them COVID rates is that I've been in this industry since 2003. I've never seen rates that low before. It was mind blowing, and it was instrumental to a lot of people that were trying to get into homes. However, that was short lived. And now we need to be real with where we are at rates. So something that, my team is fully trained on is, let's talk about lock and shop. What's lock and shop? You can call us and be like, all right, Tasha, I want to buy a house in the next 60 days. Okay, well, let's go ahead and lock in that loan on maybe a to be determined property. And what that means is that I'm going to lock in your rate while you're out shopping. How cool is that? So that, rest assured that even though if the market takes a huge shift and the rates go back up again really high, your rate's still secured. It's usually secured for 90 days. So which is great. That's given my buyers a lot of confidence in the market, because they hand over that pre-approval, they got their rate, they're ready to shop. But let's be real, not everyone's doing that. And so we need to be real about, okay, yes, the rates are higher. I myself, as a loan officer, I'm qualifying everyone at a much higher rate. Doesn't mean I'm actually going to lock you in at that, but I'm trying to make sure that your credit's great. So refinance. When can you refinance? You can refinance anytime. That's where everybody gets so misconstrued at. They're like, oh, my loan officer says I need to wait 6 months. I need to wait 3 months. Essentially, actually, you can refinance at any point in time, as long as you don't have a prepaid penalty, which generally, like I was speaking earlier, not a lot of loans do. But just double check with your loan officer. Do you have a prepaid penalty? When can I refinance? At any point in time. But you just want to be cautious with that, because there is cost that is associated with it. So we're going to refinance, and I encourage all my buyers, I want to make sure that we're making moves. Like we're, going from a 30-year maybe to a 20-year, and, we're dropping the rate and we're putting you in a position, a power of wealth to get your house paid off. So we want to make sure that it makes sense, but make sure you work with your loan officer to ensure that it's the right move and you're just not, being too quick on your feet. But again, marry the house, date the rate, and we can always change it later and refinance. But the market is still increasing, so get your dream home. We can fix the numbers later after closing when the market settles back down.
Okay, so now, Tasha, the big question. I'm thinking about going out and buying a home. I know that I need to speak to a loan officer. How do I get in touch with you?
Call me. That's all you have to do. Pretty easy. And I'm always traditionally available. We do work 7 days a week, 365 days a year. Our phone number is 505-5737. Myself or even one of my teammates are happy to help you at any point in time. And as I tell everyone, if we don't answer, just leave us a message. I promise you we'll get right back with you. We just try not to rush anybody off the phone.
Tasha, thanks again for coming in and sharing that great information for our viewers. This is Denise with Team Vergadamo. And remember, if you're thinking about buying or selling a home, reach out to us because who you hire truly matters. Thanks for watching. And again, we look forward to speaking with you.